So I'm all about like questioning everything, constantly questioning things, stress testing things to see what's truth and what's not. And now more than ever, we have to do that because there's just so much information out there that if we don't do that, we can easily be misled.
What's up, y'all? Welcome to the After Life Insurance Podcast. This has been a long time coming, and I'm super excited to get this going. Today's episode is with a good friend of mine, Charles Newton, with Secure Harbor Financial. He shares a ton of great insights on how you can optimize your financial efficiency right now and in the future. Charles is really a wizard when it comes to the infinite banking concept, estate planning, and how to use whole life insurance as a versatile financial tool. If you want to know more about the infinite banking concept, I created a free masterclass called the New Money Paradigm Masterclass, and you can get that at aliwiv.com. And if you enjoyed this conversation and got value from it, make sure to like, share, subscribe, and leave a 5-star review. Those things go a long way in helping grow and support the channel. So thank you very much. Without any further ado, let's get into it. Hey, Charles, what's going on? Happy to have you on the show. You are the first guest of the After Life Insurance Podcast. So welcome, and thank you very much for coming on today. I'm looking forward to connecting with you and hearing a little bit more about your story and your mindset around living intentionally, dying intentionally, and the more spiritual side of life insurance.
Absolutely, man. I'm really honored to be here. I'm honored to be the first person on your show, and I'm really looking forward to what we dive into.
So yeah, perfect. Let's just get right into it. I'm really interested in learning more about your story. So I know you have a well-paying job, and you've been quite successful in your current occupation. Yet you're delving into a very different kind of endeavor with life insurance as opposed to your blue-collar job. So I'm, again, really curious about the transition you made from wanting to pursue the blue-collar job and how that's shifted over time, and why the move to want to incorporate life insurance into what you're doing. And yeah, I'm curious about the transition that you've made over time with that.
So that's definitely a loaded question, Ian. I got into the blue collar trade. I actually went to trade school. I started going to trade school when I was 19 to become a welder. And I ended up getting all my certifications and landed a decent job, and then got a better job. And now I'm basically at the pinnacle of like a blue collar job, because I work at the ports of Los Angeles and I work on those big cranes. And so that would be considered in the blue collar world probably the best job that you could get out there. And it's provided for my family really well, and it gives me all the benefits, and it has, one of those elusive pensions that not many people have access to anymore. But during my whole journey of blue collar work, I've always in the back of my mind had this entrepreneurial spirit, and I've had other businesses in the past that have failed, but it like in the back of my mind, I want to be my own boss. So I've always worked harder on myself and my self-development so that I can get to the point where my businesses replace my income. Now, life insurance, nobody grows up and wants to be a life insurance agent, right? Like when you're in elementary school, you want to be an astronaut, a police officer, a firefighter, a nurse, a doctor, right? No one says I want to be a life insurance agent. But funny story, when I was in 4th grade, I said that I wanted to be a car salesman. So yeah, just kind of off the wall, right? I've always loved sales, and I love like the challenge and the psychological aspect of it. But for life insurance, it's one of the most challenging industries to actually succeed in, for 2 reasons of what I found. The first reason is nobody really likes to talk about money, and nobody really likes to talk about death. So it's a challenging thing to approach people with. However, both of those things are incredibly important. They're super important. So, I have this amazing job, but I'm really passionate about helping people, and I'm passionate about what life insurance can do for your family if you pass away early, or also what life insurance can do in your retirement. So I've really just become like an ongoing scholar and constantly learning about different ways that we can apply life insurance in our lives. to have more of a holistic approach to our finances and just to make sure that our family is protected no matter what happens in our life, because we don't know what's going to happen. Tomorrow is not guaranteed. So having those plan Bs in place is super important to me. It's like it's a part of my ethos, making sure that my family is taken care of. I have 2 young kids right now. I have a 21-month-old and a 4-month-old, and my beautiful wife who gets to stay at home and take care of those 2 kids. I call her the chief home officer. I want to make sure that no matter what happens to me, that their lifestyle is protected. And so all of those factors have really paved my transition into going in this direction and really just becoming passionate about what life insurance does for your family as a whole.
Was that always something that you thought about, or is this a relatively new shift in the way you think about the future and how to prepare for the future?
So before I got married to my wife, she was actually my business partner. I mean, we were dating at the time, but she was also my business partner. And we started a yoga studio called Happy Flow Yoga at the time. And part of creating a buy-sell agreement, which I recommend any business owner utilize, is if you don't have assets to fund the buy-sell agreement, then you buy life insurance. And so me buying life insurance was initially for a buy-sell agreement, funding the buy-sell agreement. So I've had that since I was 26 years old, and that was protecting my girlfriend, now my wife, if anything were to happen to me as a business.
So yeah, for the people who aren't familiar with a buy-sell agreement, what is the purpose of a buy-sell agreement and how is that implemented?
Yeah, so a buy-sell agreement is a contract that you can implement within your company. You would have a buy-sell agreement if you have partners. And basically, it dictates how you can sell the rules of how you sell the property or the property of the business, the ownership of the business. It also dictates who the business goes to in the event of a death of one of the members of that business. So if you don't have anything to fund your business with, let's say that I'm married, my wife and kid, and then I have another partner who has a wife as well. If that other partner were to die and you didn't have the life insurance in place, you would essentially become a partner with the next of kin, that his wife, the beneficiary of his wife. So you may not want that scenario. So having this life insurance in place would protect against those scenarios. And I have mentors who have encountered those issues, and it's a huge headache. And most people don't even think about those repercussions until it's too late. So, funding those buy-sell agreements are really important.
So it's essentially a contingency plan for business owners. If you're in partnership with somebody, if something were to happen to either of the business partners, it allows the survivor, person who is still in the business, to have a safety net, so to speak, if one of the business partners were to pass away or if something were to happen to them?
Correct. You would basically be getting a piece of the ownership. You're buying the ownership from the other party, and then you would be the 100% owner, or whatever the percentage was. You would take on that percentage, and that would all be dictated within the buy-sell agreement.
The way that I'm taking this is that you would purchase life insurance on each other. So if anything were to happen, the other partner would get the payout, and that would allow them to continue to run the business and buy out the portion that the other person owned of the business.
100% correct. It just makes everything more streamlined. Instead of having to focus on survival and mourning the loss of your partner, you at least have that income to keep the business alive and thriving.
Yeah, that's really an interesting point, because I think a lot of people, when they think of life insurance, it's in the context of passing on assets and money to the future generations of their family. And I don't think it's often thought of as a way to protect yourself in business and as well. So that's a kind of a nuanced point that I think it gets missed by a lot of people, that life insurance can have the ability to protect you not only in your family and future generations, but in your business dealings and in other areas of life as well. It's a versatile kind of a financial tool that's just focused on on providing security and safety, and it's not necessarily relegated to just your family situation.
100%. And a lot of times you can get a policy for pretty cheap if you're utilizing term at the time, where, maybe you're spending $50 to $100 a month and it's really covering that essential buy-sell agreement. So it can be really cost efficient as well. And I believe, and you'd have to check with CPA, I think it's a tax deductible too.
Yeah, it seems like a pretty straightforward and easy way to protect yourself at a relatively low cost, especially if you're using a term life insurance plan, which are, like you said, relatively inexpensive. So that was your first introduction into life insurance and starting to utilize it and think about it in that aspect.
100%. So that was the first time that I ever got a life insurance policy, because I wanted my girlfriend at the time, now wife, I wanted her to be protected in the case of me passing away, because I'm pretty acutely aware of that I'm not going to be here for the rest of my life. And I know that tomorrow's not guaranteed. And that's basically how I live my whole life, with that mantra in the back of my head, like, we don't know what tomorrow holds. But as time went on, right, and finally I realized I was going to have a kid, I realized that I needed to get more life insurance. So eventually I bought another term policy to protect my family in the event of me passing away. And then down the line, I also opened up a whole life policy. And I use a strategy called infinite banking. It's a wealth building tool. It's something where I put my money into this policy, and it's like a supercharged savings account. And so what I can do with that is I can leverage it and pull money out against the policy, and I can go and buy property, cash flowing property. But, just for everybody out there, I'm looking at getting another policy. Probably what I'm looking at is a convertible term, because there's something called insurability. And there could be an event in my life where I would maybe not become insurable, like if I were to get cancer or something like that. So it's important for me to go out and get life insurance while I can, while I'm healthy, while it's cheapest for me. Establish that insurability. It's going to be at the lowest premium right now, is like the best time that I could get it, because I'm healthy, I'm young. So it's relatively cheap, and it will protect my family until the term expires. But my goal is to convert it into a whole life policy in the future and keep that policy growing and leveraging that whole strategy.
So you're utilizing life insurance in kind of two different ways, from what I understand. The term policies are more based on protection and just ensuring that if anything were to happen to you, that your family would be protected and they would be able to maintain their standard of living and way of life, as well as utilizing that whole life insurance policy as a multidimensional kind of financial asset or tool that's going to allow you to do different things, like you mentioned, potentially investing in real estate or investing in whatever you want. But that whole life insurance policy in the infinite banking strategy is maybe less focused on protection and more focused on financial efficiency. And like you said, a supercharged bank account that's going to have multiple functions within your life, that's going to give you greater opportunity in the future. Is that on point with your strategy?
Yeah, 100%. So basically with term, it's a cheaper form of insurance, right? It's 100% insurance. But with whole life, you have a cash value aspect to it. And that's basically your supercharged savings account. The companies that I buy my policies with are mutually participating and owned insurance companies, which provide a yearly dividend. Now, even though those dividends aren't necessarily guaranteed, the companies we utilize have paid these dividends for over 100 years, through the Great Depression, through all the world wars, through the Great Recession. All of these different financial events in the world that have happened, it doesn't phase these companies by the way that they're structured and how conservative they are. So I put my money into these policies because I also have a guaranteed growth aspect of it. But the whole job of a life insurance company is to mitigate risk, right? So when you're mitigating risk, they're mitigating them going bankrupt. That's how they view their every single decision. When you view a bank, on the other hand, when you view the way the banks are structured, their whole job is to take on risk, and that's how they actually achieve a profit. So when you see these bank failures that happen in the news, it's because they're over leveraged. Life insurance companies are never over leveraged by the way they're designed and the way they're regulated by the government. So I feel much more safer putting my money in a whole life policy over putting my money in the bank account. And, people argue, well, what about the FDIC? And yes, there is an FDIC, but it's severely underfunded. If something catastrophic happens, there's not enough money in there to actually make everybody whole. But that's a whole nother can of worms that I'd rather not go into right now.
Yeah. Just to touch on that, the FDIC, from my point of view, essentially a joke. It doesn't actually protect anybody. I mean, we saw that in 2009 with the government bailout of the banks. If the FDIC was protecting the banks and the people whose money was in the banks, we wouldn't have needed the big bailout of, was it trillions of dollars to keep our financial system afloat. That's the purpose of the FDIC, is to protect us against that. And it did not. And again, last year in 2023, there was several bank failures. And I think there were 5 bank failures, and those 5 bank failures took up a quarter or a third of the FDIC's reserve. And the FDIC insures over 4,000 banks. And just 5 of them failing took up a quarter of the FDIC's reserves. So I've had the question about the FDIC as well. People have asked me about it. It's like, well, it is a real thing, but it doesn't actually provide any security to the people whose money is in the banks. It's all backstopped by the federal government, and the government's going to do whatever it has to do to keep the bank system up and going, which is not supported by the FDIC in a way that's meaningful. So yeah, I just wanted to give in a little 2 cents on that. The whole FDIC thing is really a joke, in my opinion. And so it's a false sense of security for the American public.
To me, it's more of a marketing scheme than anything else, because at the end of the day, the Federal Reserve can elect to bail out anything they want. And so, the FDIC is just to give people the peace of mind so that they can put their money in the bank where they may not be getting a return on their money, so that the banks can profit in, using the fiat currencies. So,
yeah, I'm on point, 100% agree with you there. The reason that I'm passionate about life insurance and whole life particularly, and in a lot of ways the same kind of policies that you're talking about, is that the life insurance companies are very stable and secure, and that's where the banks put their money. So I think one way I think about the infinite banking concept, and like what you're doing, is you're just bypassing the bank as the middleman, and you're taking more control of the banking function in your life. You're building a system where you can finance and do the things that you want to do without having to go through a bank, but utilizing a similar kind of system. So that concept is, I don't know if relatively unknown, but I mean, to me anyway, that concept is not really intuitive. So I'm wondering how you got from using the term insurance in a buy-sell agreement, which with your partner in the business, that makes total sense. Where did the whole life insurance and how did the infinite banking concept come into your awareness? And what was the transition to beginning to implement that on top of just using the term insurance?
Yeah, so that's a great question. So back in 2019, when I had those yoga studios, I took a course from Garrett Gunderson. He had a company called Wealth Factory. And one of the courses was cash flow banking, which is basically infinite banking. And so that's where I learned about the term, but I didn't have the cash flow to actually fund infinite banking policy at the time. So I just had the term insurance. But as time went on, and, unfortunately I had to shut the studios down in 2020 because of the pandemic. Over time, my cash flow rebuilt. I was able to pay off my debts. And I wasn't sure if I wanted to actually implement the infinite banking concept. I didn't know because there's so much information out there and there's so much misinformation around the whole concept. half the people say it's a scam and half the people think it's the best thing ever. And I'm like, well, what's the truth? So I actually became an agent. And I was like, well, if I'm going to learn about this process, if I'm going to learn about if this is right for me, I'm going to do it at a molecular level. So I became an agent, and then I scoured the internet looking for agencies that specialized in this type of strategy. And I ended up going with Chris Kirkpatrick's Life 180 agency. And the reason I went with him over everybody else is because there's a lot of fluff in the industry and there's a lot of misrepresentation of how this product works. So I did a ton of research and discovered that the way he approached this concept and the way he taught the concept was based out of facts. And he didn't oversell what it does for people. And so that's why I went with him. And I've since gone through the modules and the trainings and really been able to understand how this product works, how this strategy works. And it's more of a strategy than a product, right? But, that's how it came to be, is I just started at the very bottom and just educated myself and stress tested my biases and stress tested, oh, does this make sense? Is this true? And I would seek information. I've talked to Tom Wall. He's a PhD in basically whole life. And I've asked him clarifying questions about how to approach things or how to view things or what's true, what's factual, and what's not factual. And so just that constant pursuit of what the truth is what led me to get a policy and then to ultimately say, hey, I think this is a great strategy. I think this is an amazing strategy that people should utilize, and more people should utilize in their lives. They'll be more better off if they were to utilize this in their lives. And so basically, I'm on a mission to help people realize that on their own through education, where they can educate themselves and see if this aligns with their values and beliefs around what they want to do financially.
That's super cool. And I've heard you mention Tom Wall before, and I didn't know that you had a direct communication with him, but I know he's really a wizard in the life insurance space, and particularly in regards to planning for the future and how to help people get as well prepared for retirement and what that looks like and what people's needs will be in retirement. I'm curious. I know he's done a lot of research and he's got a couple books. I think Permission to Spend is one of his most popular and I think his most recent book, if I'm not mistaken. I'm curious about your interactions with him and what you've learned from him, and particularly in how whole life insurance can enhance someone's ability to prepare for the future.
Yeah. So the beautiful thing about Tom Wall is that he approaches and proves everything with numbers through the math and science behind why things work the way they do. And he shows the proof. The problem that we have in the financial services industry as a whole is we hear a lot of opinions, but they're not necessarily backed by facts. And a lot of times we're not thinking in a holistic manner. We're not thinking about the big picture, right? Because most of the time there's a bigger picture than what most financial planners will actually look at. So with what Tom Wall does is he just breaks down the numbers and he explains why this works and in what way this works. His big thing, like let's say that you have a 401k. If you were to properly fund your 401k and a whole life policy together, you'll have 25 to 50% more income in your retirement, and you'll greatly reduce the risk of running out of money while utilizing that strategy. That's super powerful. And there's white papers that have been done that prove that having that whole life policy will actually provide you more wealth by having both, by having the 401k and your whole life policy working together alongside each other. You'll have a more impactful retirement and legacy combining the two. So that's what really excites me. And anybody that is interested, I strongly recommend you look up Tom Wall and research his findings, but also Dr. Wade Pfau, who is a PhD in the industry. And he came from the financial side, and he ended up realizing what a powerful tool utilizing high cash value, mutually participating whole life companies can be in retirement. And so those two guys are powerhouses when it comes to the proof behind why whole life is so powerful.
Yeah, I think that's a really important point. Like not relying on one financial tool or another financial tool, looking at things holistically and knowing that there's a smorgasbord of different places we can put our money in. There's a ton of different avenues and different ways where we can allocate our funds and our resources and trying to figure out, well, what's going to be best for us and what's right for one person might not be what's ideal for somebody else. And at the same time, just putting all your eggs in one basket probably isn't the right strategy for anybody in most circumstances. So I think that's really cool that it's not an either or kind of a conversation. It's a how do we use all the tools available to us to achieve the outcome that we want and to get the best results. And I just think of having the whole life policy as a kind of the foundational aspect of your financial plan. Now, if you have money and you're thinking of the whole life insurance policy as a savings account on steroids, if that's the thing that you're building your financial structure on, it's going to allow you to make different kinds of decisions. There's an aspect to investing that's emotional. The reason that a lot of people aren't successful with their investments is because they can't ride the wave. As far as investing goes, a lot of people are told to invest early, invest often, and just set it and forget it and trust that it's going to go up, it's going to go down, and not to pull out and not to freak out when it goes down and not to get too excited when it goes up because it is going to come back down at some point. If you can adhere to that, probably going to be a more successful strategy for you. The thing is, a lot of people just don't have that ability. When they see their money going down in the market, there's an emotional response to that. Over the last 50 years, the S&P has averaged around 7 or 8%, but the actual return for most people is right around 3 because of that emotional investing and the attachment to that money and not being able to look at it long term and just leave it there and not touch it. That's so hard for people to do. And there's a research institute called Dalbar, and they do these different analyses of people's investing practices and their investing patterns. And they found that, like, very reliably, people don't get the kind of returns that the S&P averages because of that emotional aspect to their investment. So having the whole life insurance policy as a backstop, so you're not so invested in your investments, so to speak, like, it can allow people to make better investments because if something happens with the investment, they know they have a supply of money and a safe and secure asset that they can rely on to continue to have the kind of results that they want in the future. It's cool that he's looking at things in a more holistic kind of way. And that makes sense to me, getting to know you a little bit and knowing that you're not one-dimensional and you don't just jump into things. You take a higher perspective and like to look at how everything fits together. And I really appreciate that about you and your perspective.
Thanks, man. Yeah. So I think that the number one reason that somebody might not be successful in building wealth is because their money isn't in alignment with their values and beliefs. And it's not necessarily these people's faults, right? We're not taught about money in school. Don't you think that's ironic that we're not actually taught anything about money? Like, you're released into society around 18 years old, and you don't know how to build credit. You don't know how to balance a checkbook. It's insanity to me.
I think the stat is 5% of Americans graduate high school with any sort of financial education.
Yeah, that is insane to me, right? And another thing that you mentioned is that the person's average return is 3%. As humans, we're wired to buy high and sell low. That's how we're wired, right? Like, if you look at crypto, everyone's euphoric and, Bitcoin's at $100,000 or whatever, and people are buying when it's at its peak. And then it tanks to 20,000 and people sell at 20,000 like, oh, it's going to go to zero. And this is just how humans are wired, right? So sometimes taking a step back and just understanding the way money works is so powerful. And when you have a whole life policy, you start thinking about money differently and you start being wiser with your money decisions. So it's a powerful tool to implement in your life, right? Because now it's a filter and is this a good investment or is this a bad investment? Is me putting this money into this opportunity, is it in alignment with my values and beliefs? So that's the filter that I'm now viewing everything through. And I've really noticed that like I'm just more comfortable with how I'm investing and I'm more comfortable with my finances as a whole. And you touched on another thing where your whole life policy is the foundation to your finances. It really should be the foundation to your finance. If you have a strong foundation, then like you said, when you go out and invest in the market, you're not as emotionally tied to those drops because you know you have a sound foundation and you can allow your money to recapitalize and to continue to grow over the long run, right? So having that strong foundation is huge. And I feel like most people should have some form of a whole life policy in their lives. If maybe you're more into real estate, maybe you'll put more money into a whole life policy. And maybe if you're a big proponent of the 401k, maybe you'll have a more balanced approach where you're putting money into the 401k and your whole life at the same time. So there's different ways to approach this. And like you said, my goal is to like really piece those puzzles together and give people clarity so that they can go out and be more successful with their investments and their wealth building abilities.
Yeah, that's crucial. And something that you mentioned earlier, there was a point in your life where maybe getting a whole life policy, it didn't really make a lot of sense. From where you stand now, you can probably look back and feel like, okay, there would have been value to that. But at that point in time, where your values and beliefs were, it just wasn't in alignment. What I see with a lot of the people that I'm working with is that from my point of view, I can see with just about everybody where whole life could benefit their financial plan, but they may not be able to see that. And it may not be as much of this doesn't make sense as it may be this doesn't align with my values and beliefs. If you believe that all insurance is a scam, then no amount of illustrations or no amount of spreadsheets, no amount of showing somebody factual numbers and how this can benefit them, that's going to have a very little impact on somebody who's dead set on insurance as a scam. I'm curious, like there had to have been a shift for you at some point where your beliefs moved from whole life insurance is not important to now it's not only is it important, but it's so important to you that you feel compelled to help educate and show other people how this can be a really useful tool that someone can use to help bolster their financial situation. So I'm curious about what the shift in belief was and how your mindset has changed over time, and if like becoming a father had anything to do with that.
So for me, it was the education behind how I approached everything, right? I had to educate myself and then realize where this fit into my finances. And it was one of the biggest challenges of figuring out where your values and beliefs are is you don't know what you don't know. And then you have to kind of go through a self-discovery phase, which I did over the course of over a year to really figure out what I believed is true and where I believed my money should be going. And I realized that a part of that money should be going into whole life. And then when I put that money into whole life, I use it as an emergency fund. I use it as an opportunity fund. And then I redeploy that money to build more wealth in other investments so that my money is growing in multiple places and I'm reducing the risk and also increasing the death benefit that I have for my family. So just to recap, it really was just me starting the education system and then stress testing my beliefs. I think so many of us get caught on the trap of developing a belief and not stress testing it, right? We just believe, even though there's not much to back it up, and you don't question it moving forward. So I'm all about like questioning everything, constantly questioning things, stress testing things to see what's truth and what's not. And now more than ever, we have to do that because there's just so much information out there that if we don't do that, we can easily be misled. That was my approach to realizing that whole life was something that's good and what's right for my financial situation.
And you didn't say it specifically, but reading between the lines, it seems like a crucial component to your self-education and that process that you went through to stress test your beliefs. Before that was even necessary, I felt like you had to get clarity on what you really wanted and what was important to you. Without having a destination in mind, it's like any road is going to be valid. But once you have that destination and know where you want to go and have it clear in your mind, like what is important to me? What kind of result do I want? That seems to be prerequisite. Without having that destination in mind, would there have been any motivation for you to go ahead and learn about all this? Was that really a crucial piece? And what did that look like for you? Like, what does clarity on the future look like to you? What kind of results do you want in the future?
So, one of the reasons why I became an agent and I've decided to pursue this industry and fallen in love with this industry is to just really understand finances and really understand money and then understand myself, the self discovery for myself. Right. So, when I think about money, when I think about how the Federal Reserve works and how that we're always going to have inflation, no matter what, we're always going to have inflation. So if you want to combat inflation, you want to generate cash flow and you want to have assets that will appreciate with or exceeding the inflation rate. So that's why I like property, investing in property. Right. Well, another reason why I would rather invest my money in property over the stock market is because there's actually utility to investing in a property, right? Somebody has a home and they're living in that home and they're paying a monthly premium to live there, right? When you're investing in the stock market, you're just paper trading. There's no actual utility involved with it and you don't have any control over that asset. So I want something that I'm investing in, an asset that is going to appreciate over time and provide cash flow. And I want control. The more control I have, the less risk I have. So those are the filters and how I view where I want to put my money. And it wasn't until I went through this whole discovery process of going into this financial industry and seeing how things work and where I think my money should go. It wasn't until I went through that whole process that I didn't start investing. So in like the past 6 months, I bought 2 properties in Huntsville, Alabama. And it's a game changer, right? It's an absolute game changer. But then when I view how I want my family to be set up, how I want my legacy to be laid out, I'm able to buy my legacy right now. Like I may not be worth millions right now from my assets, but I'm worth millions right now from my life insurance. So if I were to die, my net worth is millions of dollars. And I'm paying for that for a pretty small amount of money, monthly premium, right? And I think that's so huge because for me, I want to make sure that my family is taken care of, whether I'm here to see them taken care of or not. And I utilize that by using my life insurance policies, my term and whole life insurance policies. And I also utilize the trust. And the trust dictates how that money is distributed to my family. And it gives them certain rules for them to utilize that money. And so being holistic and being intentional has allowed me to really just fine tune what I want that future to look like for my family. Because believe it or not, we have the opportunity to change the future generations by what we do in our life. And so that's what makes having life insurance in place so powerful, right? A lot of people overlook that. A lot of people don't even think past tomorrow. But how cool is it that you can say, look, I know that no matter what, the future of my family is set up. And some people will be like, well, I don't want to leave them that much money because that money will ruin them. And that's where I argue having a trust in place and having it structured in a responsible way can allow a trickle of money, or they can utilize the money for education or starting a business. They won't necessarily just get a whole lump sum, right? So being intentional and really thinking about how that can set up future generations that really fires me up. And I'm really passionate about helping people get all these things in place and allowing them to set their families up. Because honestly, I think that having all of these strategies and systems in place will help future society out. And there'll be a lot less struggle with money when people are learning about it and cultivating it in a responsible way.
Man, I love your focus on intentionality. And I think that ties in with the self-discovery process that you went through. I think a lot of people in the process of their life and their spiritual, psychological, emotional development, there is an aspect of until you go through a self-discovery process, people tend to live more unintentionally. My life is an example of that. There was a lot of periods of my life where I just floated around and I was doing things that were just, quite frankly, not in alignment with who I am and ultimately where I wanted to go. And it's not because I wasn't capable of it, because I didn't take the time to actually get clear on what I wanted. And that's something that you mentioned. The person saying, I don't want to leave my heirs a big chunk of money because it's going to cause problems for them. When I hear that, my perception of that is I don't want to take responsibility for teaching my heirs how to manage money. That's what I hear. And an unwillingness to take responsibility for the potential future outcome. The money isn't the problem. It's the person's education and understanding how to deal with the money that is the potential problem. That's an interesting nuance there because I've heard other people say that as well. And it's an interesting perception about money that isn't necessarily true and doesn't necessarily have anything to do with money. From my perspective, it has more to do with the individual and the thing that we touched on multiple times, a lack of education around what money actually is and how to use it properly. I'm curious if you see any similarities there or what your thoughts on that are.
No, I mean, there's definitely similarities. My big thing is you can use your trust as the education platform. You can be intentional and you can design it in a way where they have to learn or they have to jump through certain hoops to unlock the next level. Those certain hoops can be whatever you want in alignment with your values and beliefs and what you think their future should look like. And you can create autonomy within that, but, use that as an educational system, right? Because if the education system isn't going to teach your kids or future generations how to deal with money, right? If history is any indication of what the future looks like, schools aren't there to teach you about how to utilize money. But the cool thing about having your trust in place and creating an educational platform within your trust is that you can alter what those future generations look like and how they interact with money and how they view money. And I think if you have your money right, your health, you're in better health, you have less stress, right? You can be more creative. You're not in a constant state of scarcity. Like, I think just your overall well-being and health and all of those things are so much more vibrant when you have money and you know how to create it and utilize it and use it responsibly. I think your life will be that much more fulfilling, and I think society will be that much better.
I totally agree. The more we talk, the more I'm able to see the bigger picture and really the more holistic kind of approach that you're talking about. It's not just the life insurance and investing. And it's not just for right now. Those things do have an impact on your life right now, but that impact only becomes more potent as time goes on. And not only is it your life that those things are impacting, through the use of a tool like a trust, you're able to ensure and really be intentional about how the resources that you're gathering now are going to be passed on to the future generation of your family. And by being super intentional and thoughtful about your actions now, you can ensure that you get a specific result, not only after your life, but well into the future. And for me, that's really exciting. And I appreciate when people have that point of view. And I believe that if more people espouse that point of view, that like you said, we would be better off as a culture, as a society. taking on this approach to my actions now are going to affect people 150 years into the future. What does that mean? Like, how can I be more intentional now to ensure that at the end of my life, I can ride off into the sunset with peace of mind? And one of the aspects of this show and this podcast, the thing that I think about a lot is my own death. And coming from my background, I was constantly interacting with people who were, for lack of a better word, coming up against their own mortality and having to deal with that. And the more intentional we can become now, just creates a situation in the future such that, there's always going to be unknowns in the future. Death is the big one for a lot of people, and it's there, and it's unavoidable. We're all going to experience it. And a lot of people carry around a certain level of anxiety around that, which is understandable. And I think it's normal. It's healthy to have that sort of awareness of it. But what can we do now such that when we get closer to that point, that experience can be as peaceful and as natural and enjoyable as possible? How can we set up not only ourselves, but the future generations to be in a place of financial security, such that when we're on our deathbed, we're not worrying about what's going to be happening when we're gone, or that we're going to be a burden on our family. We can be in that situation and know without a shadow of a doubt that when we're gone, our family members, the people who will come after us, that we will have left the world a better place, and we will have done something for them that is going to have a positive and beneficial impact. And I think about, like, on a societal level, like across the board, how much less stress would there be around the whole process of death if more people were prepared in that kind of a way? And that's one of the things that really, for me, is motivational to help get people to that point. Because I've seen the amount of stress and anxiety that people carry when it comes to death. And you mentioned the two taboo things in our society, money and death. People just don't talk about it. And we can help ease that and make that a smoother transition and a more healthy, better kind of experience for people by making decisions now that's going to set them up to be able to have that experience that they want intentionally at the end of their life. We will never know exactly what that experience is going to be like, but we can take actions now with intention that can set us up to be in that situation in a way where we can have more ownership of it. Death is not going to be the thing that controls me. Like, I have a certain amount of say over that situation. So I'm curious around your thoughts of what do you want your experience to be like, and how do you feel like the actions that you're taking now may potentially impact your ability to ride off into the sunset and to be at peace?
I want to go back to, you asking the question, what can you do now, right? If you've made it this far in this episode, if you watched it this far, something has piqued your interest by listening this deep into this episode, right? What you can do right now is start educating yourself and start taking action. Pick up the phone, create the trust, and modify that thing over time. Most people, what they do is they create a trust, 20 years goes by, and it's never been changed. But here's the thing, we can change it, and it should be changed because we go through different stages throughout our life, right? Every few years, we should dive back into that trust and take a look at it. And we can see, do we have enough life insurance? Are our assets building the way we want to? Should we get more life insurance? What's different now? How should I adjust this? Is there grandchildren in play now? All these different aspects that in the different stages of life change it over time, right? There's nothing worse than having a trust that's just sat there for 20 years and it's irrelevant to the current situation. So if you want to be intentional and you want to keep moving forward and you want to have that peace, then go back and look at your trust and modify it and change it and educate yourself and constantly educate yourself, right? Because things change over time. And by doing so, you'll have peace of mind and you'll have the end in mind. And that will be so much more beneficial to your beneficiaries because you were that intentional. And, I've had to deal with loss in my life. And it's a pretty big burden to have to deal with a dead person, to have to deal with a dead loved one. You have the bereavement process, but not only that, you have to go and you have to handle the estate and you have to handle all these things. What if that was already taken care of for the most part? There's some people that have giving away parties before they die, and they give away things to their friends and family so that they don't have to fight over it and probate or once they've passed away. How amazing is that? Or like the house is already cleaned out. You don't have to go in there. You're not a pack rat, and you don't have to throw out truckloads of trash and deal with that whole backlash, right? Like, why should your loved ones have to deal with your garbage? And that's the way I view things. Like, make things easy, right? Come into this earth, be intentional, and then leave it a better place. And part of leaving it a better place is being intentional, having all of those systems in place now so that you don't have to worry about them, or your loved ones don't have to worry about them during your afterlife.
Very well said. And this is probably a really good place to start to wind this down. That's a really great message to send to people and to leave with folks that, yeah, there are things that we can do now to ensure that our loved ones are going to be taken care of, and we can take responsibility and ownership of what happens to not only us in the future, but our loved ones and our assets and our estate and all of that. It's like we have the ability to be in control of our situation if we choose take responsibility for it and are intentional about our actions during life. That can set us up for a more peaceful end of life process. So, yeah, Charles, I really appreciate you coming on and having this chat with me. Incredibly illuminating. I love your perspective and your heart, and the fact that you're so intentional in the way that you have chosen to set things up for your family. I think it's really admirable. I believe if more people took the same kind of intention and care with their finances and the way that they conduct themselves in their life, that our society would be very different. And I'm really grateful that you're here and you're leading by example, and you're willing to step up and do the self-reflection and self-education that required you to be in the situation where you're in. Is there anything that you would like to share before we leave this conversation?
I just want to say that I'm honored to be a participant on your show. I've really enjoyed our discussion. And like I said before, if you've gotten this far and you haven't already, start educating yourself and get yourself that trust and consider getting life insurance to fund it.
All right. Well, there will be a link to all of Charles' social media, to his YouTube channel, to his website, everything that we possibly do to plug what Charles is doing. It'll be in the notes below. So thank you all for watching, and until next time, take care and be well.